Hey everybody, it's Bill with Franklin Loan Center, and I wanted to try something a little different today to talk about a slide. This is out of a presentation or a report that we receive every month, and this slide that I've got behind me that I'll explain in a second, I thought brought a really interesting perspective to the run up in prices that we've seen recently, and actually I think makes a pretty strong justification that maybe is where it should be. So if I can just back out a little bit here. What we're seeing here is this is over here on this side of the chart. This is from July of 2002, and it goes all the way over to this side of the chart where we're looking at July of this year, so last month, right? And this the blue line here shows the price activity. So basically over the last 20 years, right? And you can see like this is all well documented, right? We saw this huge run up through '06, and then we saw that came way off this curve, and then it actually overcorrected, and then has been just sort of trickling back, and then it's like really kind of gone up significantly here over the last 12 to 18 months, right? But here's what I thought was really interesting. This red line represents a 4% per year growth rate for the last 20 years, right? So starting here, you can see that they're basically, the two lines start right there. It's all based on starting in 2002. I mean, we can make an argument for going back a lot further, but for the sake of this, it's just 20 years of data. It's pretty strong data, and particularly when you think about it in terms of looking at, here in Temecula Valley and things like that, right, which is a relatively new community since the great explosion of population growth out here. So it's so interesting because I remember when things were here and then they crashed way down to here. One takeaway here could definitely be, wait a second, if things go this far off of a long 20-year data curve, you're probably in trouble. Like things could be, really heading in the wrong direction. And then we saw that it really maxed out, and then bam, it got struck by lightning, right? And then you can see that we've actually been hanging below trend, really essentially ever since then, until we've gotten back here. And here's what's interesting and this may be hard to see on this video, but what's happened is that the blue line has finally gone above this 4% per year trend line. By the way, a 4% per year is like a really, it's kind of viewed as a really healthy market. That's the reason the chart used the 4%. And so it's really interesting. So now what's happening is prices have gone up beyond that curve, right? So now to me, it's time to just maybe watch and see what happens. I think a lot of people are predicting we could see some flattening in value. To me, that seems like it would probably at this point make really good sense, So I think this is just something to pay attention to. It's just one other way to think about what could be going on in the market. As you can see, it might not be a perfect predictor of what to expect, because you can see here how far off that curve it really went, which is really interesting to me. So it doesn't mean that there's something that's going to freeze out the market and stop it from continuing to grow. But I think it does mean that, like, my takeaway is that the closer you are to this just standard line of 4% per year, probably the healthier market you're in. So I just wanted to point that out. Please like, share, comment. I'll put a copy of this down in the comments as well so you can see it. And that's it. I'll see you all next week. Please like, share, and comment.